Hello everybody, welcome to another video here on the channel. This is episode 10 to my Chart Annotations Review Series. If you haven't already, feel free to check out the first episode. That's kind of a whole entire introduction to this. And just watch all the episodes, study the charts. You know, you'll get to understand the strategy that I use. It's mainly ICT concepts and some of smart money. So another thing is that you can check out my Discord. There's a free trial there, and you can get access to a course for completely free. So if that interests you, feel free to check it out. All right, so looking at this, this is Friday, and we had a massive sell-off on Thursday. And then we took out these lows, and we're kind of going back up in here into this 4 hour. So we also do have a little bit of, oh god, we have a bit of a accumulate. The charts are way too full. Okay, I can actually clear all this out. That's going to be a little laggy. There we go. Okay, so we have buy side up here. We have sell side right here. Some more sell side right here. Come on. All right, we go down to the 1 minute now to sort of go over the intraday action. Okay, so looking at the charts here, if we take a look at Asia and London, we still gotta take London high and London low. London has taken Asia high and Asia low, and we also are trading above the daily open. So yeah, we'll sort of see what happens here. When we're trading above the daily open, especially because we have a 4 hour order block above us, or 4 hour fair value gap, I do expect the draw to be lower for the end of the day. And then let me also draw out, does look like we obviously go higher here, but let me draw out discount as well, just to get an idea where it is. Okay, actually I have it right there, never mind. So basically, I just kind of go over the annotations and how the concepts affect price. Okay, so starting off here, this is 5 a.m., right? This is just kind of where I decided to start charting. So we have an SMT here, and this SMT directly isn't on the candles because at this time, NQ is making lower highs while ES is making higher highs. It's a divergence. That makes this be the SMT TP. This can be a protected high. We take this SMT TP, and then we retrace to a premium of this leg. We then sell off, take out this low. We're now in discount of this leg right here. We are in a downtrend going into a macro. This is where you can expect to see a reversal. So right here, this would be your market structure shift. So whenever you go into a macro, you'll have possible chance of seeing a reversal. So if we had just a downtrend, we should then see an uptrend. You want to see displacement above a recent high, which is right here. This is your market structure shift, and then a pullback to a fair value gap or an order block. So there is an order block right here. And then we would want to see if a fair value gap comes. So kind of just like sitting right here, but there's our massive displacement. Your entry would be in this fair value gap, or you could even do, since this is a bigger fair value gap, you could do discount of this leg right here, and then your stop would be at these lows. We come up, and your target would be this protected high up here, or you could trim at, I would just take it at the protected high. You could also trim at this high right here. So previous protected high is draw on liquidity. for a later move. And then here we make an SMT, and we have a reaction off. So this would be your SMT TP, and this would be your protected low. Your SMT TP should get hit before the protected low gets hit, meaning we should not go back down to this protected low. Displacement up. Here's the fair value gap after the SMT. You take it right in this fair value gap, and your target would be this SMT TP. And playing some action here. There we go. So now this model is complete. So could honestly see a possible retracement to then go higher. So you go a little bit higher right here, and then right here we form an SMT. So this SMT is probably making us want to retrace lower or just reverse the move. So this would also be your protected high. Right here, your SMT TP gets hit. Here's your retracement to 1 hour fair value gap. You also have a little liquidity gap here. We also tap into this 1 minute fair value gap. You could take an entry. You could actually take an entry. I'd personally take an entry at discount. So let's say you wanted to take an entry right here. You could put your stop. I'd probably put my stop at the top of this body right here, just to keep my risk to reward pretty good. That would be 3.5 points. That'd be like so little. And then target would be this protected high. So that gets hit. You could trim some off here, maybe leave some runners. Come back down, sort of just consolidating here. And then we form an SMT. What do we do after the SMT? We form displacement to the downside, come back up, and sorry, my dog's drinking out of the toilet. He's just lapping it down. So you can see him in the back there. So we enter this fair value gap. You can put your entry right here. Your SMT TP would be here, and this would be a protected high. I'm actually gonna label this as protected high. All right, we consolidate here. We take out this SMT TP. You could actually take another entry in this fair value gap. Put your stop at the top of this candle. We enter the fair value gap, and you can put a TP down at this low, which is also where the 1 minute fair value gap is. Now let's see where we head. So we respect this 1 minute fair value gap. We get displacement back up. All right. And just sort of forming more structure here. So now we're having an uptrend going into a macro. So we are going up right now, and there's a protected high above us. I do expect this protected high to probably get taken. So now the protected high is taken, and since we're in a macro, I would be looking for some sort of reversal to go downwards. So here's this move down. We have a fair value gap right here. This is your recent low that we market structure shift through. We don't end up tapping into the fair value gap. We go all the way down here, and the macro is over. So you can see the macro did reverse the move after taking buy side liquidity. And here we just keep going down, and we take this protected low. So now we took out this protected low. We're entering another really small macro, just 10 minutes. I do expect us to probably get a move up here, but since it is such a small macro, I'm not sure if an entry would happen. So here's a massive displacement candle up, fair value gap. No fair value gap created actually. Sort of consolidating. Here's some massive candles. This is probably, yeah, this is the 830 candle, always pretty massive. But right here, macro hits. This is your reversal point. We come up. And then up here, we form an SMT. I'll be looking for reaction off. So here's your reaction off. This would become protected high. We should not go up to here. And this should get hit. So that gets hit. We go down. Now that we have this displacement down, I'd be looking to take an entry in this fair value gap. Here's your entry. Your stop loss would be up here. And then here could be an entry. You could also put an entry down at this 1 minute fair value gap. After that gets taken, we form this SMT. Do we get displacement up? Yes, we do. So now I want to see this SMT TP get hit. We go right up there, take that. All right. Now let's see what happens. Possibly could take this protected high. This would be another TP I'd have. In this case, we don't take it. We do, after we come up and take this SMT TP, we flip to the downside, take this protected low. And now we're consolidating going into this macro. So we're sort of in a downtrend here. It's not really clear. So it looks like we're selling off here. I would want to probably see a reversal, especially because we just took out this low. We still have this high that we want to get taken out. We still have both these highs, so I think the draw should be higher. Displacement up. This is closing above a recent high. So right here is your market structure shift. We come down, tap into this entry, which is your 1 minute. Your stop loss is at this low. And right there, we take this TP out. Okay, and then we leave this protected high for a little later. We come down and sweep this low. And we're still respecting this 1 minute, so we could still go up to this protected high. So that's where we do it right there. You see, everything is playing out perfectly. And this 1 minute was respected. So now the objective's taken. I would wait for a little bit more structure. So we come up and we form this SMT with displacement down. This SMT TP is where price should go next. So that's where it goes. And it ends up taking out this low too. And so now you can see we're in a downtrend going into this macro. I would like us to possibly reverse after sweeping this low right here. So let's see if we get some sort of market structure shift. So we have a high created here. I want to see us close above it. There is a massive move. And that kind of takes it already. That kind of is the move already. But we did take this protected high. We could possibly see a retrace into the fair value gap. So right here, you could take an entry after we get this displacement up. You could take an entry right here, or you could do what I would do, and that is to take consequent encroachment of this fair value gap, wait for price to go into it, because I wouldn't want to risk this entire move. How big of a risk would this be? Let's see. This would be a 33-point risk. Yeah, I would never take that. This right here, which is not letting me see. Come on. This would be like a 18-point risk even. That, yeah, in my opinion, this really isn't worth it. I'd probably want to see price retrace down to, well, this kind of leg is like the same thing. Just too big of a fair value gap for me. But still, we do respect the fair value gap. The algorithm still is working. Even though it's too much of a risk for me to take, it still is working exactly how it's supposed to. So, generating more structure here. We are in a premium of this entire range right here, of this entire leg. We're in the premium. And then we form an SMT up here, waiting for some displacement down to confirm it. Here's your displacement down. This would be your protected high. The next target should be this SMT TP. That gets hit right here. We're also tapping this 1 minute fair value gap. So we'll see respect off it. We kind of do. We come back up to here. And then right here, we come down and we sweep this low, forming, this is not an SMT, this should be SMT. We form an SMT here. This becomes protected low. This should also be our SMT TP. And because of this model, because the draw is now higher and we just had a massive leg down, this could be considered a huge manipulation leg. So you have displacement up. This is definitely the next target. So we take the target, and going into this macro, you can see we're in a downtrend. And right here, right like a minute before the macro, is where we have this market structure shift. So here's your market structure shift, retrace to fair value gap. This would be your fair value gap entry, and this would be your stop loss right at the candle's low. First TP would be this 2.5 area. This would get beautifully taken. And then second TP at this 3.5 to 4 area. All right, so now that we have tapped this 3.5 to 4 area, I would expect to see some sort of reversal. So let's see what action does now. Sort of consolidating up here. Before taking anything, I would not simply look at this fair value gap and take it. I want to see more structure. And by more structure, I mean like an SMT maybe. Now I want to also sort of wait for time and price to align. So price forming a model aligned with time, which is like a macro. That is what I would want to see. So here we are. And another thing about macros, they don't have to be a reversal, right? They could just be a validation of, or some sort of like, I don't know, I don't really know how to explain it. It's like an activation of a model as well. So for example, if we get displacement down like this, well, actually, I don't even know why I have this here. Okay, I see this now. Well, even if we had displacement down, there is a possibility that the macro can respect the displacement down, even if we were in a downtrend. It's just more common that, like, for example, we displace up here. We don't respect this fair value gap. We displace up here. We don't respect this fair value gap. But if we're in a macro and we displace right here, most likely we'll respect this fair value gap. So here could be your entry after this displacement. You take out this recent high right here, or this one as well. Tap it. Stop would be at right here. I would probably put it at the body because this is a pretty big candle. This would be about a 7-point stop. Right, our TP would be at these two highs. Looks like we don't actually take this high. So we have equal highs here now, so this is possible target in the future. But right here, then we get displacement down, tap into this fair value gap, start going lower. Now we tap into this fair value gap that is a big fair value gap that has got respected multiple times, so I do expect this to possibly get respected again. So we come up, tap this fair value gap that's also got respected in the past, sell off here, back into this previous fair value gap. We come down, we take this low right here, tapping into this 1 minute fair value gap. Actually mark this out, and you can see this fair value gap as well has been respected in the past, right? So there's many examples of this showing. We have this fair value gap right here that's been respected multiple times. So what happens? We go over here, we respect it again, right? This candle also respects it right here. Then what happens here? We have this fair value gap. It gets respected in the past. What's it going to do? It gets respected again. You have this fair value gap that is way over here. This gets respected right here. And so it comes back again. And let's see if it gets respected, especially with combination of price going down in a downtrend. We can possibly see a reversal here, which will prove that this fair value gap gets respected again. Boom, just like that. Fair value gap gets respected. It's incredible. So, possible entry could be discount of this move because it's a big fair value gap. We tap into here, and here's 50% of the range. So you can put an entry right here, put your stop maybe right here. This would be a pretty good stop. Let's see what the stop would be. It's being like really glitchy. Okay, but tap this. We take out this TP. Now, if we take out this TP, I probably would move my stop to break even. So I would get stopped out again. I would probably get stopped out in profit. Actually, I would just get stopped out anyways. But another model comes up here, so no worries. We have an SMT. After the SMT, we wait for displacement up. Still not much yet. There's a displacement up right here, these candles. This goes up. This low becomes protected. Here's your SMT TP that gets hit in the next candle. We get some more displacement. And we have a fair value gap right here. And then you can combine this fair value gap with a breaker. Well, I thought this was a breaker. This is not actually a breaker. Never mind then. I thought there was equal highs right here when I marked this out, but I guess there isn't. So again, we have, well, anyways, we have this 1 minute fair value gap. We also have a 5 minute fair value gap. So you can put your entry here, put your stop loss at the bottom of this candle, and targets to these, both these highs right here. And then, come on, we come up a little higher, take this high, we get a massive displacement down, and then we come back up, manipulate this high. So this high took external, and then this high this leg had to come up one more time just to manipulate the high before probably having some displacement down here. Yeah. So this would be your manipulation leg on top of an SMT right here. And then this would be your standard deviation projections. So now let's watch price a little more. Right, I would be waiting to take an entry in one of these fair value gaps. Sadly, we don't go into it. So here we come up, we go into this one. You could take it here. I mean, it is pretty high. It is pretty low in the move. That's kind of a personal opinion. You could take it right here if you wanted. Whatever you're comfortable with. But we have an SMT created at this high with displacement down. Here's your protected high. This would be your SMT TP. This is a way to enter inside of this move. You have a fair value gap created right here. Then we tap into it. This could be an entry. Put your stop at the top of this high. First target could be this SMT TP. And then another target could be the SMT TP of that's actually the wrong thing. Oh yeah, no, never mind. Of this massive SMT, there's the SMT TP. And you could even have another take profit at this 2.5. And then finally at this 3.5, but I don't think we reach there. So now we are sort of in a downtrend going into this macro, so I do expect a reversal. So here's displacement up. No fair value gap right here. You could take one off of you could take an entry off of this order block. I personally wouldn't because not really much displacement yet. We're still kind of just accumulating. So here's your first form of displacement. So you could take this, right? Obviously with the annotations, it shows this is going to fail, which does sometimes happen, but if I put entry, where's entry at there? Entry right here. Honestly, I wouldn't even take this because look how big this candle is. I would probably take my entry at the halfway point. Yeah, probably the half, maybe actually the whole thing. I'd probably take it on the whole thing. So entry could go right here, stop loss down here. If you did take this though, looks like we would get stopped out. That just shows you this macro kind of sucks. But you can also kind of assume that because look how we're just chopping. It kind of shows that price is not being efficient. So if you did see this, it'd just be like this and this. Like it's not really that high quality. So maybe in the moment I probably wouldn't take it. But right here, we do form an SMT, so this is nice to see. Reaction up. This would be your protected low. We create some fair value gaps. We don't tap in anything. Then we form an SMT up here. And since we form an SMT up here, most likely this SMT TP will not get taken, but it doesn't matter because ES took it. So even if we form an SMT under it, that still counts as taking it. That's also why it's really important to obviously look at ES and NQ at the same time so you can identify when that happens. Because technically this is taking this liquidity even though it did not come up to here because ES took it. Because they correlate. And this is just where market closes, and this is probably, we're just slow. You know, we're just consolidating the rest of the day. So now let me go into the examples of all of the entries. Alright guys, so now looking at these examples, let's go through each and every other one of them. So, first example here, we are in a downtrend, macro hits, market structure shift, we come up. We have this order block right here that kind of holds. We get the displacement up, tap into a fair value gap, and right here is discount of the range. And then we move up to take out this protected high. Next that happens after we take this protected high, we have SMT right here, displacement up, tap into this 1 minute for value gap that gets respected multiple times. The target is this SMT TP, and that gets hit, and we go a little higher here. And then what happens is we come down, tap into discount of this range, which the example's not here. We tap into discount of this range right here, and also this 1 minute, and we respect this 1 minute too. You could put your stop loss right here, and we go up to this protected high of this SMT. Then right here, we have an SMT formed, displacement down. You can put an entry in this for value gap, displacement down, second entry in this for value gap. And we take out this TP, which is aligned with this 1 minute for value gap, and then with this 1 minute for value gap, we reverse and we switch up to take up this protected high of this SMT. Then we have a SMT right here. All right, displacement down. Here's your SMT TP that gets taken, and then we tap into this for value gap. Again, it's always the first for value gap that you see is usually what gets respected. Stop at the top of this wick, and then we move down to take out this TP, which is at these equal lows, and TP at this 1 minute for value gap. After we tap the 1 minute for value gap, we create an SMT. We're in discount of the previous range, and we move all the way up to take out this SMT TP. And then we come back down to take out this protected low. Where's this at? Okay, well, anyways, right here, it looks like we're in a macro. Here's market structure shift. And we tap into this for value gap, move up to this TP. We come back down, tap the 1 minute again. We actually manipulate this low. We come up, take this protected high. We come back down again, tap into the 1 minute again, respect it. We come up, we form SMT up here, displacement down, here's protected high, and we come all the way down to this SMT TP, sweep this low, and then right after we sweep this low, instantly shoot up to this protected high with this macro. Then right here, we have a move up, form SMT up here, take out the SMT TP, form some more structure. We manipulate these lows, tap in our discount of the previous range, form an SMT at these lows. We have a protected low here. We come up and we take out this protected high. This right here is also a market structure shift going into the macro, which you could take an entry off of this for value gap. And right here in this example, you could see, you could see that this goes a bunch higher. All right. Next example here, we're kind of going down, right? Just kind of chopping. We enter a macro. We're in a downtrend, we enter a macro. Displacement up, you could take it in this fair value gap, and then we move up to take these TPs. Very, very simple right there. Is this the same example? No. They look so similar. Here again, same exact thing. We have a trend down, displacement up, tap into the fair value gap, which is also discounted this range. We come up to take this TP, almost taking this TP, we come back down, you get stopped out in profit. We form another SMT right here, and that moves us up to this SMT TP. You could take an entry in this fair value gap to take out these two highs. And then last example here, you have a massive external SMT right here. Then you have manipulation after external buy side is taken. We go down on our way to 2.5. We form another SMT at these highs, tapping into a 1 minute, and then we have after the SMTs form, we have another 1 minute that gets respected multiple times, and then we sell off to this SMT TP of this, and then the SMTP of this SMT, and 2.5 or 2 to 2.5 standard deviation of this manipulation projection. So guys, that is all I have for this charting session. Again, feel free to check out my Discord. I have a ton of valuable information in a course that you can get access to for completely free. So if that interests you, please check it out. Also, like and subscribe so this gets out to more people. I want to try to influence as many people as I possibly can. We've made it to episode 10. That is 2 weeks in, and I plan on doing this for a pretty decent amount of time. So yeah, thank you guys for watching, and I'll see you all next time.